Hey y'all, this is Sherelle Martin with Nitram Financial Solutions, where we do bookkeeping without boundaries. So today let's talk about the chart of accounts. The chart of accounts is a list of accounts that make up the financial statements of a business. Every account that's on the chart of accounts either falls on the balance sheet or the profit and loss if it's in use. These accounts are how every transaction that occurs in a business, how they get coded. And so every transaction obviously goes through some form of payment account, right? A bank account, credit card, a loan, a Cash App, Apple Pay, Venmo, all those things, right? But then there are corresponding accounts that go along with it as well. And so every account that's on that list is used to classify how things are recorded. So think of these as your the accounts that tell you where everything is being recorded. It explains what all of the transactions that are in that account are made up of. As an example, an account called office expense should include any expense that's related to the office, right? An account called telephone will include all of the phone expenses that occur in a business. So those are examples. So the chart of accounts is broken up into sections, right? And those sections are also based off of the financial statements. So you have your assets and liabilities and equity, which are the sections that come on your balance sheet. And then you have your revenue and expenses that are the sections that are on the profit and loss. So whenever we first get a client, the very first thing we do is we look at their chart of accounts. We review it to see what accounts they have, and typically we restructure it to make sure that it falls in line with reporting methods. Because a lot of times business owners are making up accounts. There are vendor names as accounts. Like there's an account called John Doe. Like John Doe is not a type of expense. John Doe is a person that got paid for an expense. So the thing to remember is that the chart of accounts are the accounts that tell you what the charges and expenses are for, the revenue that came into the business. It does not have anything to do with the customer's name or vendor's name. But a lot of times when clients come to us and they have their chart of accounts includes all kinds of things. It includes names of assets. It includes name of people. It includes names of businesses. And it should only include account names. So we tend to restructure it. And so what I want to share with you is how do you restructure a chart of accounts? Like what is a proper structure for a chart of accounts? And so we try to do it numerically. So while it can be done alphabetically in some instances, we prefer to do it numerically because it kind of lines up with the way that a financial statement is set up. Now, there are rules of thoughts and opinions about whether an account should have a chart of accounts should have numbers and whether it should not. And the fact of the matter is, it is an opinion. If you start to get really good at bookkeeping and you decide that you don't want to use account numbers, you don't really have to use account numbers as long as you still follow the same structure. But some people, like myself, I prefer account numbers. And so what are those sections? So the assets, because the assets is the first section on your balance sheet, those accounts are going to be the first section in your chart of accounts. And we give them a numerical value that begins with a 1. Whether it's 100s, 1000s, 10,000s are typically the number structure. It's going to either be 3 digits, 4 digits, or 5 digits. Anything above 5 digits is usually something that's regulated. In my experience, I'll say that in my experience. I'm not going to say usually. In my experience, account numbers that are 6 digits and longer are based off of a regulated system. And so they've already pre-selected what those numbers need to be. And that's a whole nother topic for a whole nother video for a whole nother day. But in general, you're going to either have 3 digits, 4 digits, or 5 digits. And so the ones are going to be your assets. And those are going to be your cash, your receivables. So let me back up for a second. So they're going to be your assets and they're going to be charted in order of liquidity. And so what is which assets turn into cash the fastest, right? So cash are the first set of accounts, right? Because they turn into cash the fastest because they already are cash. The second set of numbers would be your accounts receivable. You're only going to have 1, maybe 2. And so because that's the second set, those would be the second set of account numbers would be accounts receivable. From there, we're going to go with current assets. So other things like prepaid expenses or other types of current receivables due from other people, loan receivables maybe will be in that bucket, because that is the third set. So if you follow me along, going into liquidity, fixed assets will be next. And then we have other assets, which are long-term assets, is the order of them. Then the next section is your liabilities. And so those are our 200s, 2000 or 20,000 series, right? So for the sake of the rest of this video, I'm just going to say 1, 2, 3, 4, or 5, or 6 or 7, right? I'm not going to keep saying hundreds, thousands, 10,000s, because you're going to get confused. So the assets are the ones, the liabilities are your twos, right? So that, and they're also going to be in order of which ones are paid. It's still liquidity, but it's based off of how they get paid. So accounts payable are paid first, credit cards, short-term, payroll liabilities are typically next. Then we have short-term liabilities, and then we have long-term liabilities, right? So the order in which you're going to pay them first through last, same thing. So those are your twos. Your threes are going to be your equity. So this is your, depending on how the business is set up, if it's a LLC, then you're going to have owner's equity, owner's distributions, owner's contributions. If it's an S corporation, you'll have, you may have common stock, and then you also will have you may have additional paid in capital, but you'll also have stockholders distributions. If you are a C corp, it's just going to be the common stock. It may also have preferred stock. Again, some of these terminologies might be a little bit, we haven't discussed them yet, so just go with me on it for the sake of this video. But there are other aspects of the equity section other than contributions and distributions and retained earnings that fall into that bucket. Then that's your balance sheet. So your balance sheet is done. So then the next set of numbers is your fours, and that rolls into your profit and loss. And so the fours are all of your revenue that come into the business. And then we go to fives, which are your cost of goods sold. So these are things that are directly related to the business, right? So expenses that are related to, let me correct my statement. These are expenses that are directly related to what it is the business sells. So if the business sells inventory, their inventory is going to fall into this bucket, right? As an example. The next section, so that's fives. Sixes are all of the other expenses. So all of your overhead, all your general and administrative expenses will fall into the sixes. And then sevens and eights we tend to leave for like other income, other expenses. So things that don't fit into any other bucket on your financial statement. And that is your setup of your chart of accounts. And so what we typically do is we'll go in and we'll restructure a client's chart of accounts to make sure that they fall within that structure, so that when you're doing your financial statements kind of flow in the same pattern. And this structure comes from generally accepted accounting principles. So it's GAAP. It's not something that I just made up and pulled out of the sky. This is a real thing that helps us as accountants and also outsiders be able to follow the flow of a financial statement. So that's how you structure a chart of accounts. Again, using account numbers is a choice, whether you want to or not. So don't let anybody tell you that it's so wrong, because it's not. But as long as your profit and loss or even the items within each section are either in liquidity form on the balance sheet or alphabetical when you're looking at your P&L, you should be good. So that is how you structure a chart of accounts. I hope that helps someone today. If so, please feel free to like, follow, and subscribe, and I will talk to you guys next week.